Good morning. It's actually good afternoon for me here in Canada. And welcome to Social Value Matters 2020. So my name is Brett, and I'll be helping out with tech support and anything that you might need for this session. So if at any point you have any issues, please just pop them in the chat and I'll do my best to help. So for anyone who might not know, Social Value Matters conference is organized this year by Social Value Canada, which is where I'm from, and Social Value International. The conference this year was supposed to be in Toronto, but due to everything that's going on in the world, we're doing it virtually. So this is the first time we've done it, and we are welcoming guests and speakers from over 30 countries across the world, which is very exciting. Today's session is going to be on social stock exchange in India, so hopefully you are in the right place for that session. But it is one of our incredible practitioner conversations, and I know it'll be fantastic. Before we get started, just want to remind everyone to keep yourselves on mute. Otherwise, we're going to have some issues with sound, and so if you aren't muted, I will be going in there and muting you just to make sure that we're able to keep that going. This session will also be recorded, so note that if you have a replay ticket, you'll be able to go back and revisit this session whenever you would like and keep that learning with you. So that's great. And then lastly, if you want to use the chat box to introduce yourself and to ask any questions, please do so. I'll be keeping an eye on it, so anything that pops up there we'll be addressing. And with that, I will hand things over to Santosh. So welcome, enjoy, and have a great morning.
Thank you, Brett. So a very good morning to most of you who have joined from India and which are part of the world. Good afternoon, good evening to all of you. First of all, thank you very much for Social Value and Social Value Canada for arranging this and having us as part of this session. I would be the moderator for this session, and I have 4 speakers who would be joining the discussions today. And to start the proceedings, let me introduce myself. The name, as I mentioned, Santosh Jairam. I'm a partner. I lead the environment and social advisory practice for KPMG in India. And also on the subject matter, I'm one of the technical committee members for developing some of the requirements around the social stock exchange in India.
Sorry,
and this
Santosh,
yeah.
I have a slightest request. Your collar mic is rubbing with your shirt. That's why it is making a bit of noise. Sorry, thank you so much.
No problem, thanks. Yeah, I think now the disturbance would have been gone. And this committee has been set up by the Securities and Exchange Board of India. And so that's my introduction. And what I will do is that I will do a brief introduction of the speakers and would request them to introduce a little more in detail with you. And then we will get started with this session. So what I will do is I will go on an alphabetical order in terms of introduction. One of our panel members is Hemant Gupta, an ex-banker who worked across Americas and India, later moved to work on socially impactful role, setting up the BSE Samman, a platform under the Bombay Stock Exchange, or BSE as it is known, which is country's premier stock exchange. He has been the member of the committee which made the first set of recommendations around the social stock exchange. So Hemant, over to you to do a bit more detail about what you do, as well as the organization from where you are from.
Thanks, Santosh. I'm very excited to be a part of this. Santosh, you've done a fabulous job of introducing me. But just to add to what Santosh said, I am a part of BSE Samman CSR Limited, which implements CSR projects for corporates. And I was also a part of the core committee that was set up by SEBI for the social stock exchange. And I'm also leading one of the groups that's been set up as a part of the technical group for implementing the social stock exchange. I also have another role at BSc where I run their incubator also. It's called Zone Startups India. So that's it from my side. Looking forward to the discussion.
Thank you, Hemant. And now I would go to Ingrid. Ingrid Srinath is the founder director of the Center of Social Impact and Philanthropy at Ashoka University. If I understand correctly, it is South Asia's first academic center focused on philanthropy and social impact. And the center produces, I have read some of the very good research work they produce, and also a lot of capacity building programs for the nonprofit leaders. Ingrid, over to you for a bit more detail.
Thanks, Santosh, and thank you for the opportunity to be part of this panel. You've really covered what CSIP does. I think just personally, like many people in the sector, I crossed over from the private sector many years ago. I've now spent about 22 years on the nonprofit side of the fence, in organizations in India and internationally, and also serve on a number of boards. And so I'm able, in a sense, to bring this more 360-degree perspective to some of these questions. We're also the beneficiaries at CSIP of having access to very large numbers of both nonprofits and philanthropists. And we've been able then to sort of garner their views in response to some of these proposals, including the SSE.
Thanks, Ingrid. Ramraj would be our third speaker in this panel. Ramraj, about 24 years in CRISIL, and he is currently the CEO at the India Impact Investors Council. It is the country's leading national industry body to strengthen impact investing in India. And Ramraj, over to you. Ramraj, can you hear us? Okay.
So, yeah, is that better? Is that better now?
Yeah.
Oh, okay. I think, yeah. Sorry about that. So as I was saying, the IIC is India's leading industry body, not-for-profit industry body for the building the impact investing ecosystem. We are supported by about 50 members, most of who are asset managers or investors in the impact investing ecosystem here. Other than that, there are also some other partners. So I think our focus is really how do you catalyze capital, how do you improve standards, how do you put together a partnership with the government to enhance the quality of kind of work or support that we can receive from the government. And also we do a fair bit of work on research and publication. So that's in brief about what IIC is about.
Thanks. And Swati is our fourth speaker, and Swati Shah is the director. She looks into impact investments and ESG at Avishkar. And Avishkar, it started with a vision to invest in entrepreneurs building sustainable enterprises, mainly looking into excluded communities and remote geographies across the globe. So a very special institution, and Swati is the director, as I said, on the impact in investments and the ESG side. Swati, over to you.
Hi, good morning, everyone. So prior to joining Avishkar, I have been mostly in the financial services, almost a decade in CRISIL, Northern Arc Capital, Mahindra & Mahindra, and brief stints at the nonprofit side as well with Teach for India, and also a recent education at UPenn and social impact strategy. So Avishkar Capital or Avishkar Group, in fact, has been present in the impact investment space for almost 2 decades. And it's not just as a conduit of providing capital to social enterprises, but also doing a whole breadth of work towards providing the intellectual capital as well. And in lieu of that, I think the 2 decades of work, we see social stock exchange as a significant way to bring a much wider pool of capital to the social enterprise ecosystem. And that is where our founder and chairman, Mr. Vineet Rai, has been a part of the social stock exchange, and I have been a part of the work that has gone into it as well. It's a pleasure to be here.
Thank you, Shadi. So what I would do now is that there would be some people who wouldn't have the kind of brief about what the social stock exchange is. And what I would do now is run you through a small context setting about what this subject is, what we are talking about, and what is the current level of the things. And then I will get into the panel discussions. So I kind of sharing a screen over here to kind of take through what it is. So it's kind of a peek into the current recommendations about the social stock exchange. And just in terms of a context setting, one is at the heart is the SDG achievement and a problem of about a $2.5 trillion annual funding gap. I think this is a number which has been there for quite some time. Definitely it would change because of the COVID situation. This is like the figure in 2019. And impact investment can fill some gap. But it's not going to substitute the whole of the public funding and all those things. It would be the small part of the filling the gap. And the context from an Indian perspective is also an experiment which happened in 2012 as part of Companies Act when the CSR regulatory experiment happened. And to some extent, we can say that that worked. Were bringing in the private sector into the national building or a social funding perspective. So all these things put together, looking into the mechanisms to unlock new capital pools is where the discussions went into the social stock exchange. And also what really prompted was the developments which was happening around the world around various financial instruments like green, social, SDG, impact bonds and all those things. So those were developing, and those were kind of some good signs to take it into this. And more focus or better focus for social impact. So it is in this context, the whole of this idea about the social stock exchange has come in. Although it has been tried in various other forms across the world in many other places, but the way it has come out after the first core committee was set up and their recommendation is a little different from what has been tried in the past. So there are two streams definitely which has come out of the recommendations. One is the social stock exchange for the social enterprise, and where the avenues are conventional equity listing and social venture funds. These are the two things. And on the non-profit organizations, the avenues come into like zero coupon, zero principal bonds, mutual funds, social venture funds, pay for success instruments. So there are multiple avenues by which the NPOs can look into this particular exchange. We will discuss on some of those avenues as well as we go along. And the enabling ecosystem around it is also something which is kind of getting developed. There are some work which is kind of going around on the common minimum standards for reporting. There is work which will start on the information repositories. There is a role for the social auditors. And in the recommendations given by the committee, there is a requirement in terms of a capacity building fund to be set up. And there are recommendations about smoothing the regulatory challenges which we have to make the social stock exchange functioning. And also on the liquidity side of the stock exchange, there is recommendations around some tax incentives as well. So I think this is just the kind of introduction what I wanted to kind of give to some of the people who are attending this, to say that this is somewhere where we are. This is not the full details, but just to give you a kind of an induction into what this social stock exchange is doing. So on that, maybe I will start the discussions maybe, with him and with you, because you have been part of that first core committee which set up many of those recommendations. And maybe it would be worthwhile to hear from you as to how did the committee go about some of these recommendations? And when you put up some of the things around, so what was the kind of engagement with the broader ecosystem, and what kind of inputs came in, and what was the primary objective with which the committee functioned, before we get into more details? So, Hemant. You are on mute, Hemant.
Yeah, thanks. Thanks, Santosh. I'll try and answer as much as I can. So first of all, the committee that got constituted by SEBI was a representative committee, including representation from corporate, from NGOs, from consulting side. There were people from the Ministry of Finance, and they've consulted also external agencies such as NGOs were brought in for consultation to get an all-round perspective as to what was required to be created. The idea behind setting up the committee was to create a framework, an outline of how we can go about setting up a social stock exchange. And like you very rightly said, what's been done in other parts of the world has not really addressed to the depth that we were trying to address both the for-profit and the not-for-profit sectors. And some of the pillars on which the committee worked upon was to try and make it as inclusive as possible, to try and make it as transparent as possible, to ensure that there is adequate input that are received from all sides, and there is governance over the operations of the social stock exchange. What ultimately, and there were a lot of discussions around the inclusion of the smaller not-for-profit organizations as compared to the larger not-for-profits. And, you know, at the end, what the committee concluded was along the following lines. So if you think about a stock exchange essentially is a set of organizations that want to raise money using securities, and they're called issuers, and a set of investors who are willing to put in money into the securities that have been raised by these organizations. And the role of a stock exchange is actually to ensure that the entities that are coming on board undergo adequate amount of due diligence. There is transparency into the instruments or securities getting listed on the stock exchange. There is periodic reporting in terms of how those instruments or securities are performing. And at the end, the investor is clear in terms of what they got out of their investment, right? So that broad framework, and then of course there is a layer of governance that sits on top. That broad framework is what is envisaged to be the social stock exchange also. So in this case, the issuers or the people who will be coming onto the social stock exchange are broadly classified, as you have mentioned in your context setting, as for-profit enterprises and not-for-profit enterprises. What the committee, and working with SEBI, we realized that from a for-profit enterprise perspective, the framework by and large exists in the form of social venture funds, in the form of mutual funds, etc. And impact investors have been there for a long time working with these social enterprises. The real work that needs to be done is actually on the not-for-profit side. And even if you look at a lot of the social stock exchanges globally, they also tend to focus mostly on the for-profit sector. On the not-for-profit side, they tend to be by and large listing platforms and not really performing the role of a stock exchange in the real sense. So in order to be able to fulfill all these requirements that were needed to put up a full-fledged social stock exchange, a framework got created where, like you mentioned, new forms of securities such as the zero coupon, zero principal bond was also introduced. In order to ensure that there is adequate transparency, and especially if you're getting investors who may not be familiar with the Indian social development landscape. There are norms that have been laid out in terms of reporting requirements. And here I want to distinguish between two sets of reporting requirements. One is a monitoring kind of a reporting requirement where on a continuous basis, the issuer reports on what is happening with the security. And then the social audit perspective, where at the end, there is an independent assessment of what has been achieved from that investment. Right? So those were the broad parameters around which the committee came up with its recommendations. The idea again was, I want to stress this again, the idea was not to create something which is ideal and perfect. The idea was to set up a framework which will evolve with time, because this is something completely new that is being attempted. There will be experiments. There will be some level of risk that we will have to take in some of the endeavors that we embark upon. But the idea is that we have to make a start, make a good start, and be ready for a long journey. That's it for my.
Okay. Now, so Swati, once this whole set of recommendations came, you do work with a lot of social enterprises as part of Avishkar, and otherwise also you kind of consult with a lot of them. What has been their thought around this? What are the first kind of reactions, or can you look at some of the expectations, what they have from the social stock exchange?
Sure. Santosh, I think from a social enterprise perspective, what social stock exchange offers is a much, much larger platform. For the first time, there will be a situation, maybe not just in India, but pretty much across the world, where we have a very equitable access to capital and a much, much wider set of capital that is being made available through a platform like this. So that's indeed the brighter side. Now, I think the expectation from creating a social stock exchange also comes from the fact that we are trying to build a market ecosystem here. We are trying to institutionalize this process and to scale it up from a social enterprise perspective. We also need to build a feasible ecosystem from the supply side of the capital, which is looking at the tax incentives, managing, building the market ecosystem, as Hemant was mentioning earlier, creating a capacity building fund. Because today, while social stock exchange allows you to participate in this much wider opportunity, it also comes with a set of expectations, which indeed, whether it is a for-profit social enterprise or a non-profit or an NPO, the capacity today is very limited to adhere to these kind of expectations and norms. So that's another thing that the committee clearly recommends, to start working towards that ideal state sooner than later, and not completely shift the onus of meeting all levels of expectations in terms of reporting, in terms of sophistication, all of that, just to the enterprises themselves, because then, it simply doesn't take off, right? So I think these 2 or 3 areas, one is building up the market ecosystem, building capacities, which again would come with building intermediaries, creating self-regulatory organizations, all of that. And on the brighter side is, of course, a much wider set of capital. So yeah.
All right. Thanks. So as we said, these 2 streams, one is for the social enterprise, which is the enterprise on the profit side, and then you have the not-for-profit kind of segments. And Ingrid, you have constant engagement with that sector. And even recently, you did a very specific consultation workshop with the sector representative on this topic itself. And so can you share how it is viewed by the sector?
Thanks, Santosh. I think just to start with, the language and jargon surrounding this whole concept in the initial phases was quite alienating to many people in the sector. And I think the first response almost was to say this does not pertain to us, or this is not relevant.
Correct. And I think the initial critic voices were too many. Yeah.
In fact, I was actually more troubled by the silence of the majority than I was by the critical voices. I think once people started to grapple with it, as you saw with the webinar where we had over 1,000 people participate, there are very, very high levels of interest, not surprisingly given the context for funding in the sector. I mean, we're looking at potentially a 30 to 50% drop in funding from regular philanthropic sources. We've now got the new FCRA constraints. And so there's great interest in anything that promises a new social impact capital stream. I think also in some parts of the sector, people that focus on these issues, just addressing these gaps of discovery, comparability, and most importantly of trust, where you've seen over the last decade a systematic erosion, if you will, of perceptions around the nonprofit sector. I think there's some concerns around. I think the other thing that's been really appreciated is the recommendations around strengthening the ecosystem. So whether that's the self-regulatory organization or the information repositories, but in particular, as Swati just mentioned, the capacity building efforts that will enable and build a sort of on-ramp for nonprofits to avail of the social stock exchange's benefits are critical. I think the concerns really are around, will this incentivize short-term, easy-to-measure work as compared to the complex, more long-term approaches which we know are more effective in achieving systemic change? I think there's a concern that the social stock exchange will focus more on the interests of donors and investors and less on the interests of recipient organizations or organizations that list. I think there's a concern that it will privilege the larger, more corporatized organizations, those, if you will, that are able to play the rating game and able to meet the norms on reporting and auditing and so on. And most importantly, I think, I think the way I might frame it is, will the social stock exchange put the metric cart before the impact horse? And will we now start to sort of, what you might say is teach to the test, which is design interventions in order to meet easy to measure, easy to report metrics, rather than designing from the point of view of what works best? Also, will we cherry pick our interventions? So will we pick those interventions then that are most market friendly, rather again than the ones that are we know most impactful?
Mm-hmm. Yeah, and the key to the success of any of these stock exchanges is both sides, right? I mean, you need to have those people who come and list, whether it is the entities or, for example, the instruments. And then on the other side, there has to be the investors. And I would like to bring in Ramraj here. Impact investors are the people whom we kind of really look forward to as the key people to come into the exchange. And being in the top of the council, how does the impact investors see this?
Yeah. So before I start, I think Ingrid put it very eloquently about the metric cart before the impact horse. I thought, I think that was very, very nicely put, Ingrid. I mean, and I don't want to kind of get into that, but specifically, I think from an impact investor's perspective, I think this is going to be a substantive positive, obviously, because this also gives one of the biggest, if I may say, issues that all impact investors grapple with at all points in time is that, yeah, these are great organizations, for-profit enterprises, they have invested, but at some point of time, they need to exit these organizations, kind of sell out their stake and obviously return money to investors. So there is a hope that this, this kind of an exchange will enable them to do two things. One is obviously the for-profit enterprises themselves, could get sort of listed here. And at some point of time, you don't know, you could even list an asset manager here. So, it's not that it's only for the enterprises. So I think that's something which is positive. It will create greater liquidity. Other thing that it is going to do is it is going to bring a lot more institutional investors to the market, because what this does is the fact that this is going to be a SEBI-regulated, institution. It will have reasonably institutional arrangements around reporting and tracking and all of that. I think is going to give confidence to a lot of investors. Lots of investors are very happy working in jurisdictions where the regulatory frameworks are very clearly defined. So this will definitely bring scale. And I think scale is something which is important, which is not to take away anything from small organizations, but eventually if you really want to create large scale impact, that there has to be a certain commoditization of the fundraising process, if I may say. So you may be still very granular on the ground, on the execution side, but you have to be global and commoditized in terms of your ability to raise funds. So I think this is going to be positive. I speak for the for-profit enterprises, but even if I look at it for the not-for-profits, this is going to open up a very new portion of funding. So I don't want this to be seen as some kind of a zero-sum game that funding will move from here to there. I think this is going to open up, and that is my hope, that it will open up new pools of funding from a large base of potentially institutional investors. There could be international investors. There could be just domestic HNI family office, and it may even be something at a smaller ticket size. So I'm quite hopeful that if this is executed well, this can substantially increase the amount of money which is available in percentage terms to the entire sector. Now, who this funding will go to, will it go to the larger players, smaller players? I think jury is out there on this issue.
So Ramraj, just a follow-up on that is there a kind of a a retail play here? Do you see a kind of a big retail play here?
I don't see it like a retail play at the 10,000, 50,000 rupee range, but definitely I would think, because if I look at a large part of today, the professional class also today, Santosh, I think there is an aspiration to contribute to the larger nation building effort. I think this has always been a subliminal thing in the Indian psyche. I cannot say for other nationalities, I am not familiar with how they think, but definitely in an Indian psyche that is always existing. So I would believe that there will not be a retail play, but there will be an HNI kind of a play. If we execute this very well, I think definitely I can think of a situation where maybe at a 10 lakh or what we call as a 1 million rupee range, I would think that there can be a substantive increase, especially if we execute well, we brand well, we communicate well, we execute well. I think that we can have a situation where you will see a large number of people who have had the privilege of education, opportunity, all of the things that all of us take for granted. I think there is an aspiration to contribute, and I feel that if we execute this well, we can really tap into that aspiration.
Yeah, Hemant, just a moment, because there is a comment which is coming in. I'll just answer that. So to all the people who are attending, you can post your questions into the chat box, and my colleague Jignesh would be collating that, and we will have about 15-20 minutes of time to answer to your questions, and he will read out the questions, and this panel, all five of us would kind of answer those questions. So Jignesh, you can note down those questions and we will set a time for that. So Hemant, over to you. Sorry. Yeah.
I just wanted to add to what Ramraj said. The initial thought was that it would be either a one-to-one investment or a many-to-one investment, where there is one issuer and multiple investors. But eventually, like you also pointed out in your context, there are mutual funds and social venture funds involved. And at some point of in the process, one is hoping it will also become a many-to-many investment, right? Where even on the issuer side, and this I think is very important for the smaller organizations, for them to participate in the social stock exchange, for some level of aggregation to happen there. And for the retail or high net worth or whatever you want to call them, investors to be able to participate. Thanks.
Yeah, so I had a kind of a follow-up question to you from what Ingrid had mentioned about the metrics, and we all know in terms of the current way of the capitalism and the exchange requirements in terms of quarterly returns and all those kind of things. So the broader question is that short-termism versus long-termism. I mean, how did the committee see this? I mean.
Hence the CSR Act got introduced. It was felt that there would be mass-scale corporatization of the social development ecosystem, and to an extent that has happened. Right? There are the 9 months phenomena that's happening, where, to Ingrid's point, a 5-year project finds it harder to raise CSR funds as compared to a shorter term project. So there will be a drift towards, to Ingrid's point, easily measurable or projects that have a more obvious impact that is happening a little bit already with CSR. But I think because of what Ramraj pointed out, which is the expansion of the people who can participate and the inherent feeling within the Indian population of wanting to give back to the country, to the society. A lot of us, like Ingrid and myself, and we have actually moved from the corporate side to the social development side because we wanted to give back, not just in money terms, but even otherwise. And I think that the will and the expansion of the investor base will also mean that some of the more not obvious, not marketable projects will also be able to get funding now. That's the hope.
So Santosh, if I may just come in, sorry about that. I think this is a very important. I think this is a very important point what Ingrid made, and about the longer term projects where the outcomes take time. I'd like to sort of think about this, that I think we have to balance the ability to build scale and to build volume in terms of investor interest and the long term project. So I would agree that in the short run, you are possibly going to get projects where it's very evident and it's easier to kind of market and report. But I would believe that whatever the good should not be the enemy of the great kind of thing. I would believe that I would much rather have that, and maybe 2-3 years down the road, you will see that as investors mature and we bring new investors, because the old investors were already doing this. It's really the question of a lot of the new investors. My hope and aspiration would be that as investors mature and understand and start getting more familiar with this space, we will see a substantial increase in interest in the more long-term complex projects. And I tell you this from my own personal experience. When I used to head CRISIL Foundation, I was a pure hardcore for-profit guy, moved to CRISIL Foundation. We started off in a simple way, but over a period of time, the kind of complexity that we were able to add, just primarily because that we just got a little more familiar and we kind of did more complex things. My aspiration would be start simple, over a period of time, build out the complexity. So maybe initially high volume, simplicity, later you're going to have high volume and complexity. So that's the kind of thing that I had. I just thought I'd put the point. Sorry to break the flow, Santosh.
No problem. So maybe Swati, I will also bring you in. Maybe you might also have a thought around this particular topic. So
yeah, so from an impact positioning perspective, I think that is where it's really boiling down to. And exactly how Ramraj had put this as well. I think that there is a sense of evolution in what we imagine as impact. I think this has just been way too long that we always imagine this impact to be a very direct sort of a thing, where we have a farmer, where we have a poor person, a tea stall owner being given capital, being helped with access to markets. Impact is a much, much larger concept. And the fact that now a platform like Social Stock Exchange helps us evangelize these ideas, that impact needs to also happen at a market level, at an ecosystem level. And I think that when we were discussing this aspect of Social Stock Exchange, it also very clearly, the report very clearly says that over a period of time, it also recognizes policy level impact and market level impact, right? So just as an organization at Avishkar, if I really take a step back and look at how we used to imagine impact as, for us it was low income populations, rural areas, all of that only. But we do realize that if we do not bring that thinking of impact at a policy level, at a market level, we would not be able to do justice to our absolute backing to the idea of impact, right? Or marrying impact and capital. And therefore, I am quite hopeful that while initially people would need that education and that optimism by seeing maybe more direct impact outcome sounding organizations, but over a period of time, and I think we're very close to that point where people do not limit that idea to very short-term impact outcomes only, and I surely think that institutional investors have that maturity coming in as well. And again, just picking up words from what Ramnath said, this is a lot about branding, communication, and I would add education, I would add governance to it. Once you bring in all of these elements, then I don't think this would be a limiting factor. I surely think that it's going to be a very opportunity creating factor
just to take up on the governance side. When we talk about impact, as you rightly said, people immediately go into the the kind of the real beneficiaries perspectives and those kind of things. But what this can also do is a better governance into a social enterprise system. And
yes, yeah. So governance aspect of it. See, I think it starts with self-governance to begin with, right? Self-governance at the organization level. Now, imagine an impact enterprise that stands today with all the absolute good heart intent business model in place. They kind of don't even know whether they list on SSC or not is a secondary aspect. The fact that today, for the first time, we have announced minimum reporting standards. When people start listing, there will be information formats. There will be more public dissemination on how to do this in the first place. I think that itself is going to demystify and uncomplicate this whole idea of how complex impact measurement needs to be, right? So I think governance has very strong correlation with clarity, confidence, and standardization, right? If you look at it from an impact enterprise perspective. So I think social stock exchange, the fact that it has defined minimum reporting standards creates an opportunity of governance, whether you list or not. That's to begin with, that's the first part. Second also is that I think creating more and more sophisticated norms, which again, as Avishkar, we kind of find it for ourselves. We have a lot of, debates around attribution for that matter. When we decided to start reporting about our funds performances almost a decade back, where nobody was doing it, so we didn't really have benchmarks to, start with. For us, governance in a way meant being transparent. So we decided to differentiate between a fund's performance vis-a-vis our portfolio company's performances. Now that makes a huge difference. Now take example of a bank. If I start aggregating impact of all my borrowers and start calling it as my impact, I think that is where this whole question of credibility and governance and how do you draw the line comes in. And of course, the last part is today we have amazing organizations which are auditing performances from the financial perspective today, right? But now that we have this kind of activity under SSE expected to happen at scale, it creates adequate incentive and business feasibility for organizations with auditing capabilities to bring that capacity to smaller enterprises as well, right? Okay. So governance has to happen at multiple levels. If you start talking about audits from day one, the question will always be who will bear the cost, right? I mean, smaller organizations cannot afford that kind of sophistication. But there is a process of evolution that SSE, I think, narrates. And just to conclude that point, I don't think governance is just about an external force. It is about creating a lot of self-accountability. And the fact that you have minimum reporting standards now being talked about publicly, everybody sort of knows where to begin with. And there is a common language that people can speak.
Yeah, sure. So I think just two things in the stock exchange recommendations to touch upon, and then I will kind of move more deep into the impact measurement and management as well. So Ramraj, one of the way to look at it, or a critical view, is the definition of a social enterprise, or a lack of definition of a social enterprise. Because if you really look at it, any enterprise creates some social impact. So you can talk about a automobile, or you can talk about a bank, or you can talk about a mining. Everybody creates some. So in terms of this lack of definition of social enterprise, what would be kind of minimum threshold? Where do you kind of define that minimum threshold?
I think that's the most important and the greatest question. There is no easy answer. And my view is that we can pontificate all we want about this issue, and we can, so my view is, if my personal thinking is broadly that we should have 2 or 3 simple criteria, not make it excruciatingly difficult for people to classify and so on and so forth. I think there are 2-3 things. One is they should be distinctly working with low-income customers. So define what low-income customers means, and you can obviously figure out and make that is an auditable kind of thing, broadly one. Second is you can define what is the nature of their work. Okay, so are they enhancing access to products? Are they providing something to the customer at a different price point? So what can happen is, I think we should focus. One is on the target segment. Second is on the target sectors like health, education, agriculture, waste management. We can figure out 7, 8, 10 sectors that we believe. So if they are working with low income customers in these 7, 8, 10, 12 sectors, I think should be a good enough place to kind of begin with. Is that perfect? Can somebody find, some gap in this? Yes. But my view is, when we are evangelizing a new idea and we want more people to participate, I think the rigor should be around the reporting and the governance rather than on an entry. That would be my view. And over a period of time, as we get more evolved, you can keep tightening this as we kind of learn. But I would think that trying to define a social for-profit enterprise or an impact for-profit enterprise in a very sort of, kind of a sequestered or a cloistered fashion at this particular point in time would, I think, only create harm. I would much rather have a situation where we have 2-3 simple criteria, which we can evidence very easily through an audit process. I mean, that is what I would.
So maybe, Ingrid, what is the researcher's viewpoint on this?
This is the $1 trillion question in some sense. I agree that we need to keep it simple. I'm not sure that it needs to be a low bar as a result. I think there's a distinction between simplicity of listing and qualifying versus saying that we will keep the bar so low as to say anyone who declares an intent to be a social enterprise should be qualified as such. I think the intentionality, the clear definition of the clear prioritization of purpose over profit is critical. I'm not sure again that what about causes like climate change? I mean, it's not easy in the climate change game, for example, to say, well, are your customers below the poverty line, or is your model sort of, if you're a research organization, how does that play? I think the one thing that we should look at is building on, there's a lot of work on this around the world, nowhere more so actually than in Canada. And so we really need to look quite hard at all the work that's been done and then contextualize it to our environment. I don't think we need to, we definitely don't want to reinvent the wheel. We could, as Ramraj said, spend the rest of our lives doing nothing else than working on this one question if we decide to sort of, get too antsy about the definition. But if we can keep these 2 or 3 principles in mind,
Yeah.
simplicity, but not a low bar, you know, how do we cover the key issues? I mean, looking at the SDG framework, for example, as a potential way to frame intentionality, and a way to also provide the metrics then that allow us to evaluate entities. And then how do can we find a way to clearly distinguish between people who prioritize purpose and people who prioritize profit? But I do want to just very strongly endorse what Swati said. So I think the bigger impacts here are on the ecosystem. If at the end of this, we simply have a better way to measure the size, the impact, the footprint, the composition of, for example, the nonprofit sector or even the broader social impact space, that alone will have been worth whatever gray hairs we develop trying to sort of get into the nitty-gritty of these definitions.
No, completely resonate with you and Ramraj in terms of that intentionality and these things. And I know Hemant, you guys in the committee would have discussed about some of the standards around B Corp and all those kind of things as well, I'm quite sure. And just asking this question, I mean, is intentionality the only thing, or should we, although Swati touched upon saying that attributional challenges and all those things, but is there somewhere the additionality also comes in? Because I come from the climate space, and when we look at a project, whether it really reduces the kind of carbon emission, we look at additionality in a big manner. So is it just intentionality, or is it in additionality as well?
We did have extensive discussions on this subject, and we came to the same conclusion that this panel is coming to, which is that this is something that will evolve over time, right? And our focus primarily had been intentionality, whether it's about the, whether you're in it for the profit or for the impact. And I think there are 2 parts, there are multiple parts to it, but at least 2 important parts to it. One is that, are you in the right space? And whether it's the SDG framework or Schedule 7 or whatever criteria you use to define whether the organization is operating in the space, climate change, health, livelihood, etc. And the second is that from a reinvestment point of view, is the business putting back what it's making into creating a larger impact, or is it taking it out for commercial gains? The problem is, how do you define, how do you create a framework through which you measure these things? And I think that's what will evolve over time.
Yeah, and so I'll come back to you, Ingrid. There has been quite a different level of interest in the last 3 years we are seeing when it comes to impact measurement and all those things. We have seen, the rise of IRIS, rise of the impact management project, and so. IMM, the impact measurement and management, has become a kind of a topical kind of an very interesting topic. And how do you see the relation between the social stock exchange and that particular topic? I mean, is it going to give a boost, or is it kind of, how do you see that?
So as you said, Santosh, there's a large number of initiatives around the world, including, initiatives to converge existing initiatives. So if you look at what the World Economic Forum is doing or what GRI is doing and so on, there's a concerted attempt to sort of try and harmonize across initiatives. As I said, I think that previous attempts in the nonprofit sector to do this in India have not gained traction. The reason I'm optimistic in this particular case is I think there's 2 new ingredients that the SSE is bringing to it. One is a sort of blanket blessing of the government, if you will. And so there's a kind of a credibility to the process that perhaps previous initiatives might have lacked. And the other is it's bringing the promise of more funding. So I think those 2 new ingredients added on top of the existing enthusiasm to sort of fine-tune impact that has come from the CSR law, for example. I know I'm telegraphing CSR law, and I should technically say Section 135 of the Companies Act, but there's already that impetus. The new philanthropist in any case is bringing a more metrics-driven focus to it. I think there's a narrative to be shaped here. If we look, for example, at development impact bonds, we can focus on the fact that the metrics are narrow, or we can focus on the fact that DIBs provide almost unlimited autonomy to the nonprofit to decide what their model is, how their money is spent, and how they measure themselves in a sense. So there are two sides to this coin, and we need to fashion a narrative that highlights both sides and not, skews it towards one or the other. I mean, if you talk to Safina at Educate Girls, the DIB accounted for less than 2% of Educate Girls' total revenues. What it did was it positioned them in spaces that unlocked other pools of capital, for one. Secondly, it made them more effective.
Yeah.
I mean, she would do this for the benefits in terms of operations that it provided to Educate Girls. And finally, the bit that we never talk about, which is DIBs are the only form of philanthropy that don't have this line item accountability, where people are not asking you how much did you pay in salaries, what was your admin expenses, what was the justification for conducting 4 workshops rather than 2. It's only looking at outcomes. And so there is a way, I think, to fashion this narrative that is more persuasive, more compelling to both social enterprises as well as nonprofits.
Yeah, interesting. And well, very easily I can kind of.
One question I want to raise, Santosh, before we move on from this topic. I think while we're framing this, we need to really be careful about the data ethics side of this. What we're seeing right now is rampant data harvesting with zero ethics from everybody, from the government, from the private sector, and from nonprofits. Women's reproductive histories are being posted in Excel sheets, unsecured online. Children are being photographed on a daily basis just to prove that they were fed their midday meal. There's a gross breakdown in ethical standards that we need to look at as well, in terms of ensuring that people whose data it is have control over how that data is harvested, how it is stored, and how it is used.
And even unique identification numbers.
Even more than anything else.
I can see scores of Excel sheet as to who all, So I think it's kind of easy for me to drift into it, but I'm cautious that we have an audience over here as well. And I would request to the audience that please keep posting your questions into the chat box. In a very short time, I will kind of take up some of those questions. My colleague Jignesh would be kind of taking some of those questions and asking to the general team. So please do post your questions over there. Just continuing this drift in terms of the impact measurement and management, Ramraj, I know that you have been kind of in a series of publications. One you just some time back did it with Asha Impact and published one I think between KPMG and we are kind of bringing it out very soon. Maybe the next week it would get out. What does some of those kind of research tell you in this case from an impact investor's lens?
No, so I think the publications that we have brought out are frankly one of the first attempts, and I must say a rather, if I may say, somewhat crude attempt at starting to at least aggregate and tangibilize the impact being created. I think there is a long way to go. But our whole agenda was that if we want to do advocacy with the government or with other people, we need to start building a database of what exactly is happening. So I think that was the first report which we published, which really tried to see what is the cumulative impact being created by the Indian for-profit impact investing sector. So frankly, that was more of, if I may say, kind of an aggregation of data from public and private impact reports of all the impact investors. I think that it was just a foundation for creating better quality impact reporting standards and an aggregation and accumulation of it to work with the government. The second report is really a position paper on what are the impact management practices that impact investors in India are having today. There is no document today which tells you that, okay, we have 30 impact funds. What is the process of impact management that they do? See, impact reporting, there is today, IRIS is there. There are so many standards. But when you really go one step further, okay, impact reporting is like saying, yeah, I know I'm 120 kilos, so I've reported it, great. But what is it exactly that I'm going to do to manage weight? What is it that I'm doing as an organization to manage my impact, right from pre-screening, due diligence, support funding, impact thesis, impact, management to an exit. So what is the nature and philosophy of management of impact that organizations have got is something. And then if I really want to go to the holy grail, then I move to intentionality and additionality, which are really, very much more challenging and really go down to the deeper sort of underpinnings of what you stand for as an organization. So I think the second study is really just it's just a position paper saying, here is a framework, here are my 40 funds, where do people stand on each of these parameters is really what we are trying to do. The whole
is
idea
it more like a maturity, understanding the maturity of the impact funds?
It is understanding the maturity of one, the industry, second is of individual members, and therefore being able to create a distribution pattern. So if you have say 10 parameters, what is the distribution of the sector around those 10 parameters? So idea is it should create awareness, it should create knowledge, it should create self-introspection for the industry that, yeah, these parameters we are doing well, these parameters maybe we need to do better, these parameters they're average. And pretty much if you see, most people are doing something around measurement. There is a reasonable impetus around measurement. Most investors focus a lot around measurement. But when you come to management, that is a space that needs greater focus, greater drive, and not just impact management. I would say documentation around impact. What is the governance process? How do you really figure out what you're doing? What kind of incentives do you have on meeting your impact targets? You have a lot of incentivization around financial target. What are the incentivizations around impact target? So these are some of the kind of areas we are trying to cover.
So Hemant, the capacity building fund, which is kind of a recommendation to be set aside, and a particular amount has also been kind of told in that recommendations. Do you foresee that as you can hear this whole topic around impact measurement and management, there is still a kind of a bit of research and kind of things which need to be evolved around this. So how much of that would go into some of those directions? Was there any discussions?
So first of all, there were no discussions around proportions that would go into specific areas. And
okay.
To me, I mean, going back to Ramraj's point, impact measurement is actually the end point, right? It's the whole impact thing is a continuum that starts from the beginning of the project and goes on till the end of the project, right? And so if you're looking at, most organizations are very weak in this space, especially on the not-for-profit side. And the capacity building fund, as you know, is focused on the not-for-profit side. And the idea behind the fund was to ensure that the minimum reporting standards, the ability to manage impact and report on it, not just at the end of the project, but throughout the life of the project. Those are some of the ideas that the capacity building fund would be used.
And this particular session, as initially announced, Social Value International as an organization kind of does this Social Value Matters conference every year, and what we are doing currently is part of that. And they're also the standard setters for methodologies like the social return on investment and some of these things. And Swati, you have been kind of in this field as well. How do you see some of those kind of standard setting bodies, their roles and all those things in this ecosystem?
Sorry, I didn't absolutely comprehend the question. Could you just sort of rephrase that?
No, I was saying is that the institutions like Social Value International, who are standard setting bodies around things like social return on investment and all those things. And how do you see the role of such standard setting bodies and all those things in this ecosystem?
So undoubtedly, I think when we are talking about, the role is pretty significant, right? My only reservation or concern is the whole contextual aspect of measurement, right? So even if I forget about the global benchmarks or global ways of measuring. If I bring that context just to India, within India itself, just saying that any investment in an agricultural company or any company that consumes agricultural inputs is going to be considered as an impact measurement benchmark, I think just tends to dilute that, right? So how would any international organization figure out a way to keep it something which is standardized and yet allow for adequate level of context to be built in? I think that balance is something that organizations such as SVI and maybe the GINs, all of us in fact are working towards, right? And I think from the point that where none of this existed, right, to a point where there are quite a few that exist, we have surely come a long way. But adoption of this, wherever you see a very rigorous set of standards, people just find it overwhelming to figure out where to begin with for the adoption, right? And if it's too simplistic, then it doesn't really solve the purpose. I think finding that balance becomes really critical. But I don't think there is no way that the sector can really grow without this kind of work. I mean, it's very, very central. And to add to it, again, because I also come from a capital markets background, accounting standards were created 70, 80 years back, right? I mean, or it took
more than 100 years.
100 years back, right? I mean, Santosh, right? So now it has taken that amount of time for globally people to speak the same language when it comes to financial performance, right? And then adopting the nuances, then having technology around adopting, reporting, all of that. Now, for impact measurement, those standards and that language, we are just about starting, if I look at that length of period of time, right? But then with technology, I don't think we'll take another 100 years. I'm sure we'll take much lesser than that. But we need to reach that ability of common languages and adequate number of people to be able to interpret that language for every player. I think that combination both are important. It's not just creating the taxonomy, it is being able to build capacities for people's ability to adopt that taxonomy. I think both go hand in hand, and there is, to conclude, there is no way to undermine the significance of organizations which are working towards building these measurements and taxonomies, for sure. I mean, I think that's...
If I may, Santosh, if I may just come in, see, I think, Swati, what you're saying is nice. The good part about accounting standard is they are all in the common currency of money. Okay, whereas here there is no, the problem is that we don't have a common currency. How do I compare a climate change with somebody in, say, whatever, agriculture or education or something? I think,
today I don't... after you.
See, so, that is the biggest challenge. And I think somewhere, we have to balance out, I think, the specificity and standardization are enemies of each other. Okay. You try to become very specific. It is intellectually extremely stimulating. Everyone feels happy, but it is not scalable. Whereas, if you try to bring a commonality, it's easy to scale. So I think that balance becomes very, very important. And that may mean that it is not as accurate as one would like it to be. But if at least I get 40 out of 100 or 50 out of 100 to start with, and then I start building sub-sector level standards, I would say is the way to sort of think about it. I think it's very, very important that we think about these standards.
So
but it's also...
I just want to, I just want to build upon that while bringing it down to, that single dollar value sort of a situation, I don't see that happening. And as you rightly said, I think that may pretty much kill the purpose itself, possibly in trying to compare apples, oranges, pears, everything with each other. And everybody feels very happy about it and feels like, that's a big ambition, but I don't think that's something we need to work towards right away. Having said that, I also see that there is so much work that's going on, which is giving you not like one terminology to build everything around to one term, but even within a sector, let's say an agricultural sector or financial inclusion sector, even if you have 10 set of parameters, now depending on the kind of work you do, you choose 2 or 3 which mean the most to you, but there is at least a common set of 10 which pretty much everybody gets, right? So at least within sectors or within, and then further within geographies, we can start working towards some level of comparability, some level of common languages, right? So it has to be that step-by-step process. And I mean, I know that we are also a part of the UN SDG standard working groups, and there is a lot of work going on around that as well. And I surely think that's important to build the confidence.
It's kind of a start, I can really say, and it was good that you brought that parlance to the accounting. I mean, the first guidelines around double entry bookkeeping, it happened with Merchants of Venice, and Luca Pacioli, the priest, was the first person who kind of come out. So from that space to what we are currently, it's an evolution and it would evolve. And when we talk about that single currency measurement and all those things and something like an SROI, but the key is also look into the context of measuring that.
Exactly.
Because if you know, when I made a presentation on the SROI to a board across 6 projects, and the board looked at each one of them. One was the ratio was 7, the other was 13, and suddenly one of the board members says, "Why don't we focus only on the 13?" That's a wrong comparison. I mean, you cannot compare between projects, but still, how do you make the 7 13? That is where the importance of the measurements and all those kind of things come in. The contextualization of the measurements and how you kind of use it to decision making. I think that's very critical in many of these things. So I think on that note, maybe Jignesh, over to you. If you have kind of arranged your questions, we are open to take those questions. So if you can read out the questions one by one, and we can see who in this panel would be the best to answer towards that.
Sure, Santosh. You are able to hear me?
Yeah.
Perfect. So I've kind of prioritized the question in a way that we are able to give a flavor to the audience. A very basic question to start with. Can we kind of bring the panel and the participants with the knowledge with regards to what are the listing requirements and how would the social stock exchange ensure that the entire process is more inclusive, where it will look into performers, to aspirants who want to be part of social stock exchange, similar to a mainstream corporate and a MSME of development sector, to call it that way, is the first question which I'd like to pose it to you, Santosh, and you could take it to the panel.
Yeah, so I think Hemant, you would be the right person to kind of answer that. And I would like to add, Hemant, on that is maybe you might want to add upon something like these terminologies which has been defined on zero coupon, zero interest, and how it kind of slightly differs from the grant making and all those kind of things as you answer this question as well.
So, Jignesh, essentially what the committee did was hello?
Yeah, we can hear you.
What essentially the committee did was to lay out a framework. It didn't get into the exact criteria that would be followed from a listing perspective. The technical group that's been formed after the report came out, one of the subgroups that has been formed, actually, their role is to define the listing criteria, both for the issuers as well as the investors. So more to come on that subject in the next month and after that. And also to touch upon the other aspect that you brought out. So one of the things that the committee deliberated on was that from a not-for-profit segment, especially people who are willing to give grants to not-for-profit, we wanted to create an environment that would enable grants also to be given. Now, essentially, a grant is a one-way flow of money, but what comes back in return is impact, right? So therefore, financially, the way it was structured, the grant was, it's a zero coupon, zero principal bond in the sense that coupon stands for interest. So there's no interest that you're getting on the money you're putting in. And zero principal because you're not getting back the principal also. So therefore, the zero coupon, zero principal bond. So create an instrument which is essentially a one-way flow of money, but you get impact in return.
Yeah, Jignesh, we can move to the next one.
Yeah, if I may, Santosh, if I may,
Yeah,
I may just come in here, if you don't mind. I think, I think there is a general sort of feeling that the social stock exchange should be something that everybody should be able to list. I think we have to see this as an expansion of the fundraising opportunities that the sector has got. Okay, so definitely there is going to be a capacity creation fund. There is going to be all kinds of support that is going to be made for people to conform to their reporting requirements and so on and so forth. But at the same time, I think there is going to be a challenge, which I think Ingrid also mentioned, that definitely this is possibly something which will have a certain, a minimum kind of a threshold for an organization to have the capacity to be able to conform to all the requirements. Yes, we can reduce that threshold by providing support financially or otherwise. But I'd like that people sort of see this as a substantial new space where, the foundations or the NGOs or the not-for-profits should be able to raise money. So I think inclusivity is important, but is this going to allow a very small NGO which is operating very deep and maybe doing a yeoman work in that particular micro market, is it going to be in a position to be able to raise funds in the next 6 months or 1 year on the social stock exchange? I think we will be cheating ourselves if we said yes to that question. I don't think that is going to happen.
Even in a conventional stock market, not every company gets listed.
Listed, correct. So I think that's important because I see this coming up time and again as an issue. So I do think that inclusivity is important, but I also do think that if we are able to open up and bring larger sources of funding, many other funders to the market, I think that in itself will be something hugely valuable.
Yeah, even in a conventional stock market.
No, I just want to clarify that I don't think, I think it's just not list of individual entities. It also allows for the social venture funds to participate. So that's another route for smaller organizations who may have limited capacity or may not be seeking very large capital sums. SVF also allows you to kind of do that aggregation and address the economies of scale. I mean, that's a very significant aspect that was discussed to allow for the smaller players to participate without, and that allows for a much larger scope of inclusion for smaller enterprises as well.
The big shift in the thought process is that when you, in a conventional stock exchange also, when you take your company into the stock exchange, what you need to change in your mind is that from now on, I have to take even the shareholders' view into my strategic decisions. It's no more my company, it's a public, so that is a kind of a thought process, and that change and all those kind of things need to be kept in mind as to who lists and what kind of instruments lists over here. Okay, so Jignesh, maybe in the essence of time, we can take.
So Santosh, the next question which is coming up is a very interesting one. That while there are many other similar things happening in the market with regards to reporting on impact front, how are we seeing the role of social stock exchange in aligning or adopting to some of the global practices which are there rather than being a unique or a different one in this era? Please.
So I mean, the others can join in, but I don't think there is going to be a subscription to a particular methodology. As we said, there will be a minimum standard or minimum requirement which will be stipulated, and then it is up to any organization to go beyond that and use any international frameworks or any of those kind of things. That's the way I see it, but open to question, thoughts from others as well.
So Santosh, completely agree with you. We're not being prescriptive at this point. Defining a minimum reporting standard. Yeah.
I think the role of the self-regulatory organization that's been envisaged needs to be unpacked a little here. At CSIP, we did a report for Niti Aayog last year, reviewing self-regulatory practices across the US. No, we looked at Australia, the UK, and the Philippines. And we also looked at self-regulatory practices in India across sectors. So we looked at journalism, advertising, and microfinance. And I think the recommendation, in a sense, from the working group to have this decentralized information repositories that then are governed, if you will, by a self-regulatory organization that has the ability to deploy capacity building funds is very much in line with the recommendations we had made in that report. So I think the role that the SRO can potentially play in unifying standards rather than, so we're not looking at, I think as Rohini,
More than a standard, it will be kind of a code of conduct or something, right?
So some sort of equivalence, if you will, to say anything that meets this norm on these various standards is good enough. And so you're looking at categories of impact rather than very precise numerical headcounts and so on. So say, are you sort of silver, gold, bronze, silver, gold on the impact front, rather than saying, you know, what specific numbers did you generate, or can that be converted into, integrated into financial report? I think we would really go down a rabbit hole, as Ramaraj keeps reminding us, if we start to sort of pick those nits. So we need to keep it at a broad classification of impact categories, if you will. And the SRO could play a really critical role in determining those standards.
Correct. And in the industry segments also, we have been seeing some of the voluntary standards kind of evolving much better than some of the very prescriptive kind of
So
things.
this is what actually worried me, Santosh. Yesterday I heard someone, a CEO of a company, say that they're now conforming to, or they're reporting to 63 different ESG norms. I mean, if we do that to the nonprofit sector or the social enterprise sector, we will kill it, you know, ab ovo kind of thing. We need to sort of harmonize as much as possible. We certainly don't want people filing reports to 63 authorities.
Yeah, it's a good for a profession like mine. I mean, we can do benchmarking at each one of them.
Not so subtle takeover of the sector.
Now good. Yeah, so I think we have to think beyond that. Yeah, so maybe the last question.
Back to you, Santosh. Come back to you, Santosh. Two interrelated questions, and I see where it is coming from. So one is, what kind of benefits do you see this social stock exchange listing will bring to not-for-profits or social enterprises who get listed into it? And a linked question to it is it a diversion of fund which will happen? Let's say the government funding which used to go to not-for-profit, will this move through this route? Is the concern which is coming, or is CSR funding going to move to this route? So are we going to generate more funds and more investment into SSE, or is it a diversion of fund which will finally happen? Is a kind of concern and a question which is coming out from the voices of participants here.
So I'll start by saying that right from the front, it was with a very clear objective to unlock new capital, and it is not supposed to divert anything. And the way it is structured also, I don't see any way where there can be a diversion of public funds. I don't think government is going to put money into the stock exchange. No, maybe only on the capacity building fund or something like that, there would be some bit of it. But otherwise, I don't think it is going to divert anything. But I'm quite sure others would also have some thoughts around it. But for me, there is no way it can divert other funds.
I think, however, Santosh, that there's actually quite an important impact that traditional funders can bring to the social stock exchange by way of a signaling impact.
Right.
You know, if people who've been investing in the sector for decades signal their faith either in the system at large or in particular instruments or in particular organizations, that would play a huge role in reassuring newer providers of impact capital that that people who understand this business are putting their money here, and so therefore this is something that I should consider as well.
Yeah, so I think, Santosh, my view is that, see, 2-3 things. One is, the question was, what benefits will it bring? My aspiration is that this should bring scale in fundraising. that should be in 2-3 ways. One is that our larger, if I may say, not-for-profits should be able to raise funds far more efficiently and from a wider base of investors, I think is something that is my aspiration. And this should be incremental funds. It's not you go back to the same people and now you just sign documents on the exchange. So I think that's the first aspiration. Second, I would believe is that we should be in a situation where these organizations can. What was the question, Santosh? We were discussing on
diversion of funds.
So my view is, see, if I look at the large CSRs, I don't think that they are going to divert because they have their own governance structures. They have their own CSR subcommittees of the board. They will be running large projects. They are not going to let go of all the rigor of analysis and oversight that they need. But what could happen is some of the smaller organizations which have smaller base of funding to make available, possibly they may say, hey, why not sort of fund these directly? We know that so-and-so is an anchor in this particular, kind of zero coupon bond. We know that this very large foundation is anchoring this. It's a good one. Let's put our money there. So you may have some bit of a diversion. But I think the real exciting thing will be is that if we are able to create, good structures, we are able to market them well, you could see new money coming into this. There are a large number of charitable organizations which are doing all kinds of things. Now, can we get them excited to come and participate here is really what it is. Can we get more international organizations to also come and participate in a way? I think is where we should be looking for.
Yeah. So I think Hemant, the last 2 minutes, maybe I started with you, so maybe I can close this with you. One is to this whole question about CSR. I know the committee talked about, if you are spending more than 2%, you can kind of offset it against who is not spending the 2%. So that way it's additional, this thing only coming in. But I want you to change your hat from this particular role, which I was asking, to a proper stock exchange and say, how confident are you to bring liquidity into this?
Well, as a stock exchange person, if you look at there's a primary market and a secondary market liquidity, right? The primary market part is the part that I'm confident about. I have no doubt in my, and especially going back to what Ingrid said and Ramraj said about one, that they're key players, thought leaders in the space. They come behind the social stock exchange. It can only expand the pool of funds that is available, right? On the secondary market side, I think that is a story that will unfold over time. At least initially, I don't see too much liquidity happening from a resale. By secondary market, I mean resale.
Correct.
I don't see too much liquidity happening on that side, right? And therefore, I think that with more development impact bonds, more mutual fund kind of structures, social venture funds, maybe we'll start seeing some of that also happening. But initially, I see primary market liquidity being there, secondary market not so much.
Right. So I think it was wonderful having this chat with all of you. I really, I didn't feel the 90 minutes how it went. I just looked at it, and I still have many questions inside me itself to kind of check with you. But then I'm quite sure that even the people who kind of joined us would have a whole list of questions as well. And there will be continued discussions on this, and I'm quite sure that each one of us individually would be kind of discussing this in multiple channels and all those things. So there are ways by which we can answer some of those questions coming out. And so thank you for joining me in this particular thing, and thank you Social Value for arranging this, and Social Value Matters Canada for arranging the whole of the infrastructure and, inviting us to do this particular session. Hopefully, we have not answered everything to the perfect point, but it's a direction, as we all mentioned, that it's a direction which we are taking. And it's definitely would have some very good learnings on the way. So that's it, and I over to you, Brett, if you are there. Thank you very much.
And thank you to all of our participants and our speakers. That was incredible. I think that's probably the session I've seen with the most questions, so that's amazing. For those of you who might want to revisit it, this has been recorded. So if you have a replay ticket, then you'll be able to come back and play it on demand. And for everyone else, there are sessions happening throughout the day, so please feel free to join. And so final thank you again, and have a great morning.